Hello and welcome back to Explain the Charts. It's October 14th, 2025, and today we are breaking down one of the biggest stocks in the world, Apple, symbol Apple. We have a lot to cover, from major news surrounding the iPhone 17 launch to a fascinating story playing out on the price charts. First, let's get into the recent headlines to understand the current sentiment around the company. The news flow for Apple has been overwhelmingly positive lately, centered around its new product cycle. Multiple reports indicate that demand for the new iPhone 17 is tracking significantly ahead of last year's models, with some analysts suggesting it's 10 to 15% stronger. We're seeing evidence of this with extended shipping lead times, especially in key markets like China, which investors are interpreting as a very healthy sign. This excitement was amplified by a major call from Wedbush, which raised its price target on Apple all the way up to $310 per share. They believe investors are clearly underestimating this iPhone upgrade cycle. Beyond the iPhone, Apple also launched its new Watch Series 11 and AirPods Pro 3, continuing to strengthen its ecosystem. The company is also making strategic moves with retail expansion in India, a massive growth market. However, it's not all sunshine and roses. There are persistent concerns among some analysts about Apple's rich valuation, with the P ratio sitting near 37 to 39. Some argue that even with strong iPhone sales, the growth rate might not justify such a high multiple. Additionally, questions remain about Apple's long-term AI strategy and how it plans to monetize its new Apple Intelligence features. So we have a classic battle: strong current product momentum versus long-term valuation and strategy concerns. Now, let's see how this narrative is reflected in the charts. Starting with the daily chart, we can see the bigger picture for Apple over the past year and a half. The most dramatic feature is the massive sell-off we saw back in early April of this year. Let's zoom in on that period. As you can see, the stock plummeted from around $223 down to a low of $169 in a matter of weeks. This was a brutal shakeout, but what followed is incredibly bullish. The price formed a classic V-shaped recovery, roaring back with immense volume, which tells us that institutions were buying that dip aggressively. That low of $169.21 now stands as a critical long-term support level. Returning to the full daily chart, since that April bottom, the stock has been in a powerful and clear uptrend. The price has formed a pattern of higher highs and higher lows, which is the definition of a healthy bull market. Now, let's connect this to the recent news. The iPhone 17 launch and strong demand reports came out in mid-September. Let's zoom into that specific time frame. You can see here, starting around September 12th, the stock began a powerful ascent. Then on September 22nd, when the Wedbush upgrade hit the news, we saw this massive green candle on huge volume, pushing the stock from around $248 to over $256 in a single day. This is a textbook example of positive news acting as a major catalyst for the stock price. This rally continued, taking Apple to a new all-time high of $260.10 just a couple of weeks ago. This $260 level is now the key resistance level to watch. The price was decisively rejected from there. Following that peak, we've seen a bit of a pullback, which is normal after such a strong run. To understand this recent pullback, let's switch to the 1-hour chart and look at the last couple of weeks. The most significant event here is the sharp drop on October 10th. We can see the price broke down from the $254 consolidation area and fell sharply to find support around the $245 mark. This move happened on elevated volume, suggesting some profit-taking and short-term bearish pressure. The price has since been trying to stabilize above this $245 support level. Now, let's drill down even further to the 15-minute chart to see what's happened in the last couple of days. Yesterday, on October 13th, the price action was choppy, trading in a range between roughly $245.50 and $249.50. The stock is currently in a consolidation phase, coiling up after the recent drop. This suggests the market is trying to decide on its next directional move. The battle between buyers and sellers is happening right now, making the current price levels very important. So, let's recap the key price levels and what to look for. On the upside, immediate resistance is at the recent consolidation area around $254 to $256. Above that, the major hurdle is the all-time high of $260. On the downside, immediate support is the recent low around $244 to $245. If that level breaks, the next significant support area is around $238, which was a previous resistance level in mid-September. A further breakdown could target the $230 level, a key pivot from early September. So what's the outlook? Let's outline two primary scenarios. The bullish scenario, which I'd give a 60% probability to, is that the current pullback is just a healthy consolidation. If Apple can hold above the $245 support and reclaim the $250 level with conviction, it's very likely we'll see a retest of the $256 resistance and then the $260 all-time high. A confirmed breakout above $260 on strong volume would signal the next leg up, reinforcing the long-term bullish trend. This would be reinforced by continued positive data on iPhone sales or a strong upcoming earnings report. The bearish scenario, with a 40% probability, is that the recent rejection from the all-time high was significant, and the market is now more concerned about valuation. If the price breaks below $244, it would signal that the sellers are in control in the short term. This could lead to a deeper correction towards the $238 or even $230 support levels. A catalyst for this could be broader market weakness or any negative news regarding Apple's supply chain or demand in China. The key thing to watch in the immediate future is whether the $245 support level holds. That will be the market's tell for the next move. In summary, Apple's fundamental story is strong with its product cycle, but the technicals show a stock at a critical juncture after hitting a major resistance point. Keep these key levels on your radar to help guide your decisions. Thank you for watching this analysis on Explain the Charts. Please remember to like and subscribe for more in-depth chart breakdowns. And finally, a quick disclaimer: this video is for informational and educational purposes only. It is not financial advice, and you should always do your own research before making any investment decisions. Trade smart, and we'll see you in the next video.